Good morning, everyone, and welcome back to this new episode of the. Let's start with a recap of yesterday's. Was basically moving along as expected with a bit of upward momentum, except that in the evening there was a US 20-year bond auction that did not go well. As I wrote yesterday in the chat, it's not usually a very closely watched bond. It's kind of in between the two giants, which are the 10-year and the 30-year bonds. So it's not usually very popular, and the auction itself was for a relatively small issuance amount. However, it was definitely an important auction that institutional investors were watching very closely to carefully gauge the market's ability to absorb the US bond in relation to the yield being offered, and the upward push in yields, and therefore the breakout we also saw yesterday, the breakout of the 5% yield threshold on the US 30-year bonds gave us a small taste of what could happen in the markets. That is, if what is looming for bonds, especially US bonds. But we also saw warning signs on the Japanese 30-year last week. These tensions, in short, generate major portfolio reallocations that will certainly be very violent. So what we saw yesterday might just be a taste of what's to come, so we need to monitor things closely. In fact, I've prepared a chart of the US yield. Here it is. This is a monthly chart of the yield on the US 30-year bond, and as you can see, yesterday we well crossed into extremely dangerous territory. We have these three further resistance levels. The oldest one goes back here, but is not shown on the chart because the chart. But basically, we're heading up to a yield of 5.40, going back to 2006, 2007. So if we were to surpass these thresholds, it would open up some really, honestly, very worrying scenarios. In my opinion, what could ultimately determine whether certain levels are broken or not is definitely the budget plan that's expected next week in the Chamber of Deputies. We'll see what its scope will be and how they intend to reduce spending and therefore the budget expenditures. So we will need to pay very close attention to this, and above all, I repeat, to these key levels that, as we've already mentioned several times and pointed out in recent weeks, these levels are now starting to waver. In the same way, of course, the flip side of the coin is obviously the stock indices, which are obviously being dragged down. At the moment, there's also a bit of an issue with funds. We've already talked about this in past weeks that, let's say, by mandate are forced to re-enter the market when there's a drop in volatility like the one we've seen in recent weeks, and so they're repositioning themselves in the market and have sparked this rally we're witnessing. However, if this scenario with bonds were to materialize, we would obviously see an increase in volatility, and these funds, of course, would be forced by mandate to close their positions, so this would amplify the movements. This would then obviously also bring the stock indices down to important support levels that we already almost touched yesterday, and we'll take a closer look at those in a moment. If these supports are broken, institutional investors and market makers are forced to sell in order to hedge their positions, which could further amplify, well, these bearish scenarios. So maximum caution is needed, especially considering that today there is from a macro perspective, the jobs data for unemployed, for new jobless claims, for new job openings, and there are the PMIs which can definitely be market movers. However, in my opinion, the main focus that the market participants have on assets right now is particularly closely watching the yield on the US 30-year Treasury. So pay maximum attention to these details. From an operational standpoint, as we were saying, the Nasdaq, I've drawn this line here. Basically, I've identified, in my opinion, this is the area to watch for the Nasdaq. definitely the 28 area, while for the ES we can identify 58 as the final support stronghold. If these supports are broken, in my opinion, selling will come in very, very, very strongly. So from an operational point of view, at the moment the Nasdaq is working well around the BC3 levels from this morning, but still it's on the lower end, let's say, of the trading range we had identified. So pay close attention to this level of 21,100, the area of 21,100, 21,080, because breaking this level could easily bring prices right here to the area we have indicated. On the upside, of course, a recovery to 2220, 2250 could easily bring prices back into the BC3 area and higher levels, and so perhaps go on to test 21 again, 21.4, which seems to me in short to be the first important resistance level. As for ES, instead we can see it here. The situation is more or less similar. The level to monitor, in short, as discussed at the beginning of this daily analysis, is this range from 5 to 8, which today more or less corresponds to the VIX 1 minimum area. So pay maximum attention to this area. For the upside, at the moment we are obviously monitoring yesterday's low, which is in the SD0 area. Holding this area could easily bring prices back to test the 5,009, 5,009-10 area. On the other hand, the break of SD0 would likely bring prices back to test precisely this area we've indicated, so we need to pay maximum attention to it. Let's move on to the other two American futures. Here is the Dow. This is the Dow Jones, which has held up a bit better compared to the others. And it has managed to hold the 41,800, 42,000 level. Is basically working around there. So this is the area to keep an eye on. A break below this level could easily bring prices back to the 41,000, 42, 41,800 area. On the upside, of course, we need to monitor today's RD on area, because in my opinion a breakout here could bring prices back up to retest this area, which basically corresponds to the 1D max zone. The Russell, as a consequence of this whole increase in yields, obviously loses more in relative strength compared to the Nasdaq, ES and Dow Jones, precisely because a rise in yields obviously hurts small and medium-sized indebted companies, which will have to pay higher interest to obtain financing. Here, well, the situation is this. We lost the 200 level, which was an important area. We've pointed it out several times. There was an attempt to recover it yesterday at the open, but unfortunately it failed. And then, well, from around 7 o'clock onwards, after the close of the auction, there was this sharp drop that brought prices for now to work around the 2050, 2040 area. And this is the area we need to keep an eye on, because a break below the 2045, 2040 area, so between SD0 and SDON, would easily bring prices down to the 2000 level. That's another key support level that absolutely needs to hold for an upward move. Obviously, we first monitor SDON, which is basically the first level of resistance that shows us the strength the market might have to push the price up. If we manage to break through this level, I would probably expect a test of the 2.08 area from below, which corresponds to these lows here, so it will definitely be difficult to overcome. Let's also take a clear look at the DAX, since European indices are holding up a bit better, just as European bonds are also holding up a bit better, but certainly the tensions that are in short, the warning signs of tension we saw yesterday in US bonds are definitely reflected, at least to some extent, in Europe as well. Well, yesterday the DAX, as we mentioned yesterday morning, also as a result of the European Union's move to shake things up with tariffs against the United States, made a strong upward surge, hitting a new all-time high right at the open, then seemed to pull back, basically just going with the flow of the day, mirroring what was happening in the United States. At the moment, the markets have been open for about half an hour, and we are currently trading below S-Dawn, so we are definitely keeping an eye on the upward movement. SD0 is important because if it's recovered, the prices could move back toward RD0, which represents the area of the highs reached yesterday. On the downside, instead, we are monitoring these two lows that were recorded yesterday morning, actually. Tuesday, no, yesterday morning, yes, Wednesday, well, basically yesterday evening after the US 30-year and 20-year bond auctions. So we're keeping an eye on this area around 23,940, which is definitely an important support. Let's look at oil. Oil was losing a bit of ground. Yesterday it had a strong surge that pushed prices up to the 64 area, and we mentioned the possibility of a false breakout from this range. After that it pulled back, and this morning the price actually went to test the lower part of the range, breaking through this low here for the moment. We'll see if it turns out to be a false breakout or a real one, but a break of this level could probably bring prices down to around 59.50. So this is a level that I think they will try to defend. On the upside, we can easily monitor the area between SD, Ardon, and the re-entry into this range at the BC3 levels. Let's also take a look at gold. Of course, here it is. No, this is gas. Just a second. Here it is. Okay, here it is. This is gold, basically. That, well, it surged yesterday, it surged upwards. As we were saying about this, I haven't had time to update the chart. Maybe I'll try to find some time for it today. It seems to have resumed its upward path due to tensions we mentioned. We are going to well. We have recovered the gap that was left open at the beginning of the week, actually even a little above it. And now it has settled again right at the open at last week's closing, as we can see here. So we need to monitor these levels because for sure we can expect a test of the HV level, but also of SD0, or really this whole area here, which could represent a good entry point for some long positions. A possible break of this area could then bring prices back to retest this entire zone here, which also corresponds to the VIX 1 minimum area. On the upside, of course, a break instead of DRD dawn and, well, a new test of the highs actually recorded this morning in the area of 3,348. 3,350 could easily bring prices back to retest the highs area of 3 and 4, which then corresponds to this entire zone here that we pointed out in recent weeks. As for the SPX yesterday, basically we completed the retracement wave. We mentioned this in the chat, this retracement wave that we had pointed out, and in fact the price closed right there almost to the millimeter. We'll see if today, in short, this upward wave will eventually start giving all these tensions. Probably not, but we'll see. Anyway, I've drawn it here, and well, it would have a target area of 6,000, 6,086, and if it were to have the same intensity as the others, as we've already said several times. Okay, let's also clearly take a look at Bitcoin, which, well, yesterday performed its really sailing full speed ahead. Already last night it went to test the VIX 1D max area. At the moment it has pulled back, settled on Ardon, which right now is acting as support, and the movement is starting up again. A break of this area, of course, could easily bring prices to the 112, 113.5 or 114 area. That's not missing here. On the downside, let's keep an eye on the DRD area, specifically DR Dawn, because a possible break of this level could bring prices back to test this whole area here, this high here, and this high here, around the 108.5 area. Perfect. With that, we've reached the end of this morning briefing, and we'll catch up again later in the chat. As always, I invite you to leave a like on the video, follow me on social media, and thank you all for your attention.